Hello friends, so today we are going with the next standard, IND AS 21, the effects of changes in foreign exchange rates. IND AS 21, effects of changes in foreign exchange rates. So what is the standard all about? The standard is all about international transactions. Okay, international transactions. So as we all know, any international transaction will be executed in a foreign currency. Okay, there will be a foreign currency in which this international transaction will be executed, and this foreign currency, of course, it could be US dollar, or it could be British pound, it could be AED, or it could be euro, it could be any foreign currency, right? Okay, all these foreign currency vis-a-vis Indian rupee. What is our Indian rupee? Indian rupee is the, I would call it as domestic currency for the time being. Domestic currency. Okay. So all these foreign currency vis-a-vis the domestic currency fluctuates in value. So the value of $1 in rupee, okay, is not the same today. Today it could be, let's say, $1 is equal to 88 rupees. Now after 1 week it could be, let's say, 89. After 1 year it could be 90. So like that, any foreign currency, the value might change day by day, month by month, or even year by year, right? It will change depending upon the time. So when the exchange rate changes for the foreign currency and the international transactions are denominated in foreign currency, these are denominated in foreign currency. How to do the accounting of such transactions which are done in foreign currency or denominated in foreign currency? That is what IND AS 21 talks. IND AS 21. So IND AS 21 talks about the accounting treatment of the effects on what? On the financial statements, effect of what? Changes in the foreign exchange rate. Whenever there is a foreign exchange rate and these foreign exchange rates changes, okay, what is the effect of such changes in the foreign exchange rates on the financial statements? That is what we are going to deal here. Okay, now this standard is considered to be, a very complicated standard by many students, but at the same time, for those who understand the principles, it is a very simple standard also. And most of the times what we have seen is, whether it is a problem on consolidation, or whether it is a problem on business amalgamations, or even a direct question on IND AS, you might have the application of IND AS 21 because it deals with the foreign currency. Okay, now coming to the standard proper. Again, I am telling, we are discussing only about the gist of the standard. I am not going in depth, so don't expect me to cover all the points which are there in the standard, for which we'll have to see the detailed lectures, right? Okay, so here we have to understand the difference between two things. One is functional currency, and the next one, presentation currency. So what is functional currency and what is presentation currency? That is the first point. Now let us take the case of, let's say, Reliance Industries Limited, our flagship company in India, RIL, Reliance Industries Limited. Reliance Industries Limited is headquartered in India. Okay, this is an Indian company. Now this company might be having, some operations in, let's say, US. Okay, then it may be having operations in UK. Many, or we can even say almost all the countries across the world. Similarly, this might also have subsidiary Again, the subsidiary could be in UK or in US or let's say UAE, anywhere. Now, it can also have associate enterprises. Let's say in Australia or let's say in Japan. Okay. So, Reliance Industries could have direct operations. It is building some refinery in let's say UK, and that building building of refinery is directly executed by Reliance Industries. So, direct operations. Now, it can also have a subsidiary. So, the name of subsidiary will be Reliance Industries UK Limited. Could be that. Or Reliance Industries US Incorporated, like that. Similarly, associates. It could be an associate in Australia where they have invested more than 20% each. Okay. So, now let's take the case of the Reliance Industries operations in US. Suppose they are building a refinery in US. According to the laws of that, US, it will have to keep the books of accounts. So the books of accounts have to be kept. Books of accounts to be kept in that foreign country. Okay. So it is a direct operation of Reliance Industries Limited. Reliance Industries Limited is an Indian company. So what is its domestic currency? The domestic currency is rupees, Indian rupee. So can Reliance Industries Limited tell in US? See, we agreed we have an operation in US. It's a big operation. But we don't want to keep our books of accounts in your currency. Rather, we are an Indian company. So we will keep the books of accounts for this US operations in which currency? Indian rupee. Will it be okay for US government? No. US government want the operation done by Reliance Industries in US to be reported in dollars. So the books of accounts of this transaction, being a direct operation by the Reliance Industries Limited, an Indian company, have to be kept in what? The US dollar. So this US dollar is what is known as functional currency. Similarly here, UK, pound is the functional currency. Now here, when you come to Japan, the yen is considered to be the functional currency. So what is functional currency? Functional currency is the currency of the primary economic environment in which it operates. So functional currency is the currency of the primary economic environment. Okay, the currency of primary economic environment in which that operation or that entity. Here when we talk about an entity, means the entity will be specified to the US entity, or that operation, that itself is an entity for the purpose of IND AS 21. So the primary economic environment in which that entity operates. So that means US dollar, pound, etc. Okay, so whenever you have different entities, okay, each entity will have to determine the functional currency, and that functional currency should be linked with their economic environment, the primary economic environment. So here for the Indian entity Reliance Industries, the functional currency will be what? Rupee. Whereas the same company having an operation in US, it will have its functional currency in dollars. Then here pound. Reliance having subsidiary in UK. So this is an independent entity, and that UK entity, which will be the functional currency? Pound. US dollars. Like that it will keep on going. Okay, so the subsidiary in UK cannot say that, see, our parent's currency is Indian rupee, so we are also going to maintain our books of accounts in Indian rupee. Is it possible? No, you can't say that. So that is the importance of foreign currency. And once this foreign currency is determined, it cannot be changed unless there is a change in the underlying transactions. Okay, now these operations have closed, and these operations have been, the refinery have been moved to Canada. Okay, agreed, you can change the functional currency. Otherwise, unless there is a change in the underlying transactions or events or conditions, they say that unless there is a change in the underlying transactions or events, okay, or conditions, you can't change the functional currency. I hope that is clear to you. Okay, now what is presentation currency? Presentation currency is nothing but the currency in which the entity prepares its financial statements. Okay, so if the financial statements are prepared by the US operations independently, then it will prepare its financial statements either in dollars. If they are presenting it in dollars, then presentation currency will be dollars. But if they say that, okay, agreed, we are keeping our books of accounts in dollar, but for the purpose of preparing the financial statements, let us prepare it in Indian rupee. If that is permitted, that Indian rupee will become what? Presentation currency. So the presentation currency is nothing but the currency in which the reports are presented, financial statements are presented, or any other information is presented. That's all, nothing else. So I hope this the difference between functional currency and presentation currency is clear to you. Now the next aspect, okay, having identified, the functional currency and presentation currency, now we have to see what is the main content of this standard IND AS 21. Okay, the IND AS 21 mainly talks about two things. IND AS 21 talks about two things. One is international transactions or foreign currency transactions. Foreign currency transaction. Okay, now the next one is, you can say translation of financial statements of foreign operations to presentation currency. So what is this? Foreign currency transaction. Reliance Industries Limited in India is doing a foreign currency transaction with another entity in UK or another entity in US. Okay, so the transaction, if it is denominated in foreign currency, it will come under the first category. Okay, now what is this? Translation of financial statements of foreign operations to presentation currency. So as I already told you, these foreign operations, whether it is a direct operation or a joint venture or a subsidiary, they will maintain their books of accounts in functional currency, and those functional currency could be different from our Indian rupee, which is the presentation currency. So if the functional currency is different from the presentation currency, the financial statements or financial information or financial records which is prepared or which is reported in the functional currency will have to be translated to the presentation currency, and presentation currency is what? Indian rupee. So that financial statements of operations in US or UK, in Australia or Netherlands, whichever one, have to be translated or converted into what? Indian rupee. That process is what is covered here, translation of financial statements of foreign operations into presentation currency. Okay, so let's see what are the principles over here. Okay, so here, whenever there is a foreign currency transaction, you will have to look at two things. One is initial measurement and subsequent measurement. So what is this initial measurement and subsequent measurement? Let us take an example. Okay, Reliance Industries Limited exported goods worth, I'm just taking one example as $100,000 on, let's say 28/2/2025. Okay, the company received the amount only on 31st July 2025. Okay, so what is happening here? There was an export of goods, and the export of goods was worth $100,000. And when was it exported? It was exported on 28/2/25. And when did the company receive the money? It received the money only after few months, that is on 31/7/2025. Okay, now how do we account this transaction? That is what we have to see here. Okay, when it comes to accounting, first you will have to see what is the transaction date, initial transaction date, or we will call as the initial measurement. Okay, or recognition. Okay, so the initial transaction happened on 28/2/2025. So 28/2/2025, Reliance Industries will have to recognize the sales, right? So it is going to be foreign currency receivable, debit to sales. So can Reliance Industries report that it is $100,000? No, because for the Reliance Industries Limited, the presentation currency is what? The presentation currency as well as functional currency is nothing but it is Indian rupee. So any books of accounts can be maintained only in Indian rupee. So you can't account like this. Rather, what you will have to do? You will have to, okay, you will have to convert this foreign currency. Convert this foreign currency. How do you convert this foreign currency? What is the foreign currency over here? It is 100,000. This 100,000 have to be converted into Indian rupee at the spot exchange rate, spot transaction rate. Okay, so the spot rate of the transaction date. Okay, so we write it as spot rate, SR. And let's say on this transaction date, that is 28/2/2025, the spot rate was, let's say, 80 rupees per dollar. Let's assume. So what it will be? It is 80 lakhs. So this is going to be 80 lakhs over here, and here also 80 lakhs. So this is initial recognition or measurement. So as per IND AS 21, any foreign currency transaction have to be initially recognized on the transaction date. Okay, it has to be measured on, or it has to be recognized on which date? On transaction rate, transaction date. And what is the rate? At spot rate. Spot rate means the exchange rate that is prevailing as on the date of transaction. Now, so there is a receivable of 80 lakhs. Now what is happening? You have a year end which is coming in. What is the next year end? 31/3/2025. So when you come to 31/3/2025, this 80 lakhs receivable is outstanding in the books of accounts. Okay, now if you see, ideally, is it 80 lakhs receivable? No. What is receivable is $1 lakh. It is $1 lakh what is receivable. It is not 80 lakhs rupees. So what the standard says? The standard says that, okay, if this is the case, what you will have to do? You will have to remeasure the value of the receivables. How do you remeasure the value of receivables? See, right now it is receivable. It could be even payable also. Okay. So you will have to remeasure, reassess. How to reassess? You will have to see what is the exchange rate as on 31/3/2025. Exchange rate over here was 80. Now it has become to 81. 81 per dollar. So what will happen? This 80 lakhs should go up, and this will increase to 81 lakhs. So there is a gain of 1 lakh rupee. So the standard says that this have to be recognized as an income or foreign exchange gain. Okay, the foreign exchange gain or even loss should be recognized to statement of profit or loss. Statement of profit or loss. Okay, now if it was 79 instead of 81, 79, then it would have been what? A loss. of 1 lakh. I hope that is clear. Okay, that is for the initial measurement as well as subsequent measurement. Now what do you have to do? When you actually receive the amount, when will you actually receive the amount? On 31/7/2025. Okay, your receivables would be, as on that date, your receivables will be, let's say 80 plus 1 lakh 81. So it is outstanding at 81 lakhs receivable. But unfortunately, on this date, the exchange rate is only, let's say, 78. Rupees 78 per dollar. So what amount you will receive? You will receive only 78 lakhs. Okay. So what is the difference? 3 lakh. And this 3 lakhs is going to be loss on foreign exchange rates. You recognize it into profit or loss. Okay. So I hope that is clear to you. So this is foreign currency transaction. So they say that if the foreign currency transaction is respect to monetary items. What do you mean by monetary items? Monetary items means two things. One, units of currency held. If there is any currency held, that is monetary item. Or any asset or liability to be received or paid in fixed or determinable amount of money. Okay. So the liability or asset and the amount receivable or payable is fixed or determinable. Okay. If that is the case, it is monetary assets. If it is not that, then non-monetary items. Like your PP, you purchase an asset. Okay, you purchase an asset and you recorded that asset's value. That's a non-monetary item. So in case of non-monetary item, okay, if the item is carried at historical cost, okay, so monetary item we already told it has to be reported at the closing rate, okay, on the reporting date, right? And the gain or loss is recognized in the profit or loss. Whereas in case of non-monetary items, okay, if the non-monetary item is carried at historical cost, non-monetary items carried at historical cost, that is one, okay, or carried at revalued amount. These are the two options. Revalued amount. So if it is carried at historical cost, then you have to consider the rate as on the transaction date. That is transaction date. Whatever be the transaction date, on that, what is the exchange rate? You can't use the closing rate. That has to be used here. And for the assets which has been revalued, okay, the rate as on the revaluation date. So on the revaluation date, what was the amount? That you have to consider. I hope that is clear. And any translation gain or losses on asset or liability should be recognized in statement of profit or loss. Gain or loss will be taken to statement of profit or loss. I hope that's all with that's clear to you, and that's all with the foreign currency transaction. Now coming to the next one, translation of financial statements which are presented in a functional currency different from the presentation currency. If those financial statements are also in Indian rupee, then you don't require any IND AS 21, because this is also in Indian rupee, that is also in Indian rupee, just consolidate. But here, if this is in presentation currency, which is rupee, and the other one is in functional currency, which is dollars or any other currency, then what do you have to do? The financial statements or financial details which are presented in foreign currency have to be converted into Indian currency so that you can consolidate it. And for that, you have to see what is the principles to be followed. And for this translation, IND AS 21 says that, okay, the method of translation, okay, in case of assets or liability, okay, you have assets or liability, you have to use what? Closing rate. The exchange rate on the date of financial statements, that is closing rate. Okay, and income and expenses. Income, expenses. Now the peculiarity of this assets or liabilities is that it would have originated on a particular date. So there you use the closing rate. But in case of income and expenses, they don't permit you to take the closing rate. Rather, you will have to either go with the rate on the transaction date. Okay, so rate on the transaction date. Okay, and if the transaction date, taking the rate on the transaction date is not practical, then what you have to do? You will have to take, or if it is not practical, you have to use what? Monthly or quarterly average exchange rate. Take the total transaction for a month or a quarter and then see what is the average exchange rate during that period. You translate at that. Okay, and if you have any resulting difference, if there is any resulting difference like any gain or loss, then what you have to do? This have to be recognized in other comprehensive income. Okay, it will be taken to OCI or other comprehensive income as foreign currency translation reserve. OCI as foreign currency translation reserve, FCTR. So this is what IND AS 21 says. Okay, so translation also we have seen. Okay, this is applicable only when what? The presentation currency and functional currencies are different. They are not equal. Okay, so now the question is, if you have a functional currency and presentation currency, is it mandatory that you have to prepare the financial statements in both presentation currency and functional currency? No, not required. Okay, you can have a different presentation currency. It is not mandatory that you should prepare the financial statements in what? Functional currency itself. You can have a different presentation currency. Okay, and wherever you have accounting records, it has to be kept in functional currency itself. Okay, so maintain the accounting records in the functional currency, and at the end of the period, when you have to prepare a financial statements, you decide on the presentation currency. So don't do the accounting in what? Presentation currency. That's not possible. Okay, I hope this is clear to everyone. Now there are when you come to the standards in proper, you have many other regulations and requirements. I have not gone into depth of of those principles. Okay, so this is only just, I hope it helped you all. Thank you.